shaken yet standing firm. This is Radio Cayman in the Cayman Islands.
Live from Radio Cayman Studio, this is
Money Sense, bringing an informed financial perspective to the Cayman community.
The Cayman Islands Chamber of Commerce Pension Plan. We're here for you. We are a not-for-profit, member-centric plan with a democratically elected volunteer board of trustees representing all sectors of the Cayman Islands economy. We have an all-in expense ratio of less than 1%, over 20,000 members, and $490 million in assets under management. We were the first multi-employer pension plan approved by the regulator in the late 1990s, and today we are still strong, secure, and are here for our employees and employers alike. If you would like to join or require further information, visit chamberpension.ky. And for information as it happens, follow us on Facebook, LinkedIn, or Instagram. Email admin@pensions.ky or call 745-7630. The Cayman Islands Chamber of Commerce Pension
Money
Plan.
Sense is
We're
brought to
here
you
for
by the
you.
Chamber Pension Plan.
For further information, visit chamberpension.ky.
A very good morning and warm welcome to Money Sense. I'm Simon Caudry and I'm joined this morning in the studio by the lucid and thought-provoking Adam Newman. In our What the Devil Does the Future Hold in 2021 show in January, one topic Adam mentioned, but had very little time to discuss, was decentralized finance and the future of the financial system. As a well-known Luddite that I am, Adam has therefore taken it upon himself to seek to bring me kicking, screaming, and more than slightly reluctantly, into what he considers to be the future. Today's show is therefore to be an education for me, and hopefully an education, or at the very least, thought-provoking and information session for you, our listeners. With that, Adam, let me cast off those chains of ignorance and faith to history and tradition and venture bravely into the future. I say bravely, but let's see what happens.
Good morning, Simon. Good morning, all our listeners. I've been very keen to chat about decentralized finance. It's, I started these radio programs probably a couple of years ago talking about Bitcoin. And, for me, Bitcoin was definitely Act 1 of what's going on in the financial system. And now I think we've, approaching Act 2 of where we're going.
Is this not a Shakespearean tragedy?
So in terms of, I think, we are now witnessing the biggest shake-up of the financial system in decades. I mean, I seriously believe that it's that big. We are reimagining how things in the financial system are done, and we're building what I believe is the most inclusive, fairest and transparent financial system. Sounds, huge claims to be made, but, hopefully as I go through this, I'll have some people on board and people at least pique their interest to finding out a little bit more about what's going on.
And you're saying that, I suppose, from the backdrop of the financial system not having changed in decades, fundamentally. It's still the same wiring, the same processes.
It is. I mean, the biggest change really was probably Bretton Woods in the last, 50 years and coming off the gold standard. But, in terms of the processes, the way we send money around the world, the
archaic, shall we say?
Yeah, exactly. Antiquated. Exactly. There's a lot of friction and inefficiencies in the system. And actually, with the age of technology that we're in today, we can do these things so much more efficiently and better. But sometimes it needs a catalyst to actually allow, world adoption. And I'd say the real catalyst was the macro backdrop, the problems we've had since 2008, the financial crises, which has precipitated people to start to reimagine and rethink things, and led to, which I talked about as Act 1, Bitcoin, which was the first sort of digital money built on a blockchain, a decentralized, which is key here, and we're going to talk a lot about decentralized systems, but decentralized, immutable, open source, trustless system. Okay, which sounds, huge, but we can sort of pick each of those things apart. But in terms of, why we talked about traditional finance and the system being antiquated, out of date. In terms of what that means, it's inefficient in time and money. There's a lot of friction. It takes time to send money around the world. It costs money, whether it's through fees, FX rates, spreads. We lose a lot of money on transactions. It's fairly inflexible. It's a very rigid system. It is slow. It's quite selective in terms of who it includes. If you don't have the right credit rating, you may not be able to get a bank account, and
or if you're a Cayman bank, you may not be able to get a correspondent account, and therefore not be able to send money anywhere in the world.
Exactly, it's sort of one size fits all. Whereas the new system is very much, or the way we're looking at things is much more user centric. Putting the user at the centre and being able to do things that sort of almost bespoke things that the user can do. And the new system is, I think why it's so amazing is it's open source. Open source means someone has written some code and allowed everyone to view that code. So basically designing a system which everyone can see and everyone can contribute to improve it.
Like a Wikipedia entry in a sense.
Yeah. So you build out and build out and build out.
And if people don't think it's good enough, they can enhance it by adding content to it, thereby making it better.
Exactly. That's exactly right. Because of that, it's transparent, so we all know what the system looks like. It's not behind closed doors. It's not some sort of credit rating system that no one actually knows how it works. And then some of the key words, which some of the jargon that's used in the space is it's interoperable, which means it can communicate with other systems, which is really key because, a lot of the systems built, particularly like bank systems, internally, they don't talk very well to other systems.
Has anyone on this island ever tried to do online banking? Absolute nightmare.
Exactly.
None of them work. They're all terrible. And that's because you're saying they're built on systems that were sometimes developed 30 years ago. And then they build something 20 years ago, and that tries to talk to something 30 years ago. Then something 10 years ago that tries to talk to something 20 and 30 years ago. And then someone out of college builds something today and has no idea what to do about the stuff from 30 years ago.
Exactly. And that's just possibly within one bank or one sort of ecosystem. Then you look at
certainly within Cayman.
Yeah, exactly. And then you look at trying to talk to other parts of the world and stuff. So anyone who's actually, tried to send money to or from Cayman will know that it takes a long time. It's not instantaneous. You'll lose fees. You pay fees. You lose money on the FX. But we already have the technology today to be able to send money instantaneously with almost zero friction, i.e. no fees, anywhere we want in the world.
So sort of, if I could dumb it down for someone like me, even I have a PayPal account, and there I can sort of send money to someone else's PayPal account without cost instantaneously, and then within 5 seconds they can see the money's there. And I can send that anywhere in the world. And yet, for me to send money to my own account in the UK from my own account here could take me 3 days. It will get lost. I'll have to phone the bank. It's cost me about $150. Craziness.
Yes, okay. Exactly. You hit the nail on the head. So, yeah, this
I'm
whole...
going for winning the banking population vote here.
Well, so from my point of view, the genie is now out the bottle. Like, we have... This technology is there, and it's just a question of how quickly it becomes integrated and adopted into the current system. So I also mentioned like the macro got us there, and then we had Bitcoin, which is the catalyst, and it was the first app. Now, Bitcoin's taken us so far, but as particularly people who are skeptical about it point out, Bitcoin's not a great medium for buying a coffee. It's expensive. It's relatively slow compared to other cryptocurrencies, and you don't want to pay for your coffee in Bitcoin today. But there are other systems where you can, buy things like coffee very cheaply and very with little friction. So Bitcoin, to me, is a digital store of value, and its true competition is things like gold, treasuries, real estate. It is a store of value, and I think that's how we should sort of think about Bitcoin and separate it from the rest of crypto.
Unless you lose your crypto wallet in a landfill somewhere. Which hasn't happened in the UK or in Wales, didn't it?
Well, it has happened in the past, but less so.
Dastardly Welsh.
There's been a huge improvement in how we custody digital assets.
And that's an important point, isn't it? When you're talking about this sort of technology, there are a lot of people who are using it, but sometimes the early adopters can be complicated to store these things, and so there is some new technology that allows people to store and secure and protect their assets.
So there's been huge improvements in that, and we can see that because of institutional adoption. Institutions would not be investing in this stuff if there wasn't secure and easy to use ways to store assets. I think the other big thing that we're only just starting to see, but is improving at very, very fast speed, is all around the UX, the user interface, how users interact with digital assets. So it's becoming more seamless. You don't have to understand the technology to be able to store your assets. Like in the way that you navigate the internet, you're now starting to navigate these digital wallets, in a similar easy fashion. But already we're seeing some of the most basic services being done, financial services, without the need for middlemen. So our traditional finance system is a centralised one, and it relies on intermediaries, banks, exchanges, middlemen who are rent seekers and are an inefficient part of the process. Today, we can, through the new decentralised finance, we can send and receive money anywhere in the world instantaneously and cheaply. We can borrow and lend. And I'll come on to these in a bit more detail, and we can trade. So we can do some of the most basic financial services in this decentralized system without the need at all for any bank to get in the way. And that is because it's decentralized, open source, and what we call trustless. Trustless. So you don't. The way the system has been constructed, you don't need to. Goes one step back. It's a peer-to-peer system, so it's effectively you and me transacting, rather than you transacting with the bank who transacts with me. And we call it trustless because I don't actually have to trust you. The way the system has been constructed is the verification method means I don't need to know who you are for the system to work. Okay, which eliminates the whole need for an intermediary.
I guess the obvious question that arises from there, we live in a world, in particularly in Cayman, where we're always under scrutiny, rightly in some instances and perhaps wrongly in others, for lax historical regulation of identification of individuals and banking regulation. We've had many bank failures here. We've had many financial institutions fail here. And regulators have not yet touched this space of decentralized finance. They sort of let it play in the corners and do its thing. So will a lot of these efficiencies that you talk about suddenly be regulated away, in the sense that regulators will get their grubby paws on it, make it worse in many respects, and then we'll say, well, this utopia suddenly isn't quite as optimal as it was designed to be because of regulation?
I would say that's probably one of the biggest risks and something we should all be aware of. I'm an optimist on human innovation, and I'm an optimist that we will, when we have a technology that improves people's lives and can be more inclusive, ultimately that will win out over regulation. So when I mentioned at the beginning, this is one of the most inclusive systems, far more inclusive than what we currently have. This means that basically, if you have an internet connection, you can connect yourself to this new financial system, and you are today, with as regulation stands, or as the regulatory light environment stands, can buy or sell coins, you can borrow or lend money, and you can send money around the world. I mean, that is really incredible. Now, regulation is important to protect people, but I would say, the flip side of it is banks have been able to decide who does or doesn't get banked. Now, I know examples of friends who have had their bank account closed because they are buying or selling crypto in the UK. UK banks have decided that that's not okay. Is it right that the UK bank decides that it's okay what you do, or how you lend your money, where you put your money? I think there's a huge overreach from the government, and I think we're going to see a huge pushback around government authority and what we should or shouldn't be able to do with our money.
I think that's a very interesting aspect. I suppose part of what you're saying is that you don't, in some of this, need regulation because it's self-governing, in a sense that you can't do something illicit. Well, so you could do something illicit, but it would be known about, and there'd be a record of it. So you'd be a bit dumb to use a system for that. But we're going to take a short break in a brief few seconds. But I want you to mull on this particular thought, because it's something you said just a moment ago which struck me as interesting. You said with an internet connection you can do X, Y, Z. And I guess there's a lot of talk over the last few years about the increasing disparity of income between those who are wealthy and those who aren't. And part of it is access to technology and such like. So when we come back from the break, maybe you could just give us a 45 second, 60-second thought on what does this mean for those who don't have access, either currently or in the near future, to this technology? Will there be a bifurcation of a further bifurcation where people with access will become increasingly wealthy and those without will not. So with that thought in your mind, we'll just take a brief break and then we'll come back with Adam Newman talking about the future of finance.
The Cayman Islands Chamber of Commerce Pension Plan. We're here for you. Are you currently a member and interested in the management of your pension plan? If so, consider becoming a volunteer trustee. Becoming a trustee is a great way to play an integral role in the governance of your pension plan. If you'd like to learn more, email pensions@chamberpension.ky or call 745-7630. The Cayman Islands Chamber of Commerce Pension Plan. We're here for you.
Money Sense, the only personal finance radio show in the Cayman Islands, hosted by Simon Caudry from the CFA Society Cayman Islands.
This is Money Sense.
Welcome back to Money Sense, suitably caffeinated and open to ideas, I hope, as we gaze deeper into the looking glass and perhaps happen upon some wisps of inspiration. Adam, remind us where we were in your own words, and then, to misquote the Marseillaise, marchons, marchons.
You posed an interesting question about whether, because this technology relies on an internet connection, whether it could ultimately lead to sort of more wealth disparity. I would say not. Like, if you look at how many people are unbanked around the world, I think it's something like 2 billion people. They're not unbanked because they don't have an internet connection. They're unbanked because they don't qualify in the current financial traditional system.
They're not lucrative enough for the banks.
They don't have a credit history, whatever it is, to be able to participate in the system. So I don't know, what the...
You're saying it won't make it worse because it's already pretty horrible.
Exactly. Okay. And actually, I would say it makes it far fairer because a couple of things. One, the penetration of mobile phones, smartphones, is huge. I don't know what the number is, but I would say there's probably more people with smartphones than there are with necessary bank accounts or being able to be part of the traditional financial system.
It's probably easier, rather flippant comment, but it's probably easier to get internet to the most obscure place in the world than it is to get a bank to open an account for you if you live in that obscure place.
Well, if you think about in Africa and places like, is it Kenya, was Safari Bank or something? They're doing banking, internet banking, beyond where, where we see in some developed places.
So this actually could help over time a narrowing of that gap because more people have access to the financial system without requiring the bricks and mortar of the banking institutions.
100%. And then the other side of it is certain financial products have only been available to what we call accredited investors. And an accredited investor is a term that someone has not arbitrarily decided what that is. Just because you don't qualify necessarily having a six-figure sum to invest does not mean you're knowledgeable enough to invest in certain products. What we're finding with this new decentralized financial system is there are products which would have ordinarily been available only to accredited investors are now available to other people who have a very good understanding of the system. So they are actually able to get exposure to things that would have only been for the wealthy, let's say.
Give us an example of, practically speaking, of what you mean by that, because I think that's quite an interesting concept to a lot of people. This decentralization of finance may allow me to get access to that which currently seems to be the preserve of the influenced, the connected, the wealthy.
Sure. So as a very good example, there is today there is about to be an institutional product to get exposure to decentralized finance. It is a product called Bitwise Fund, and they will. So I think you have to have a minimum of 100,000 and various other requirements to get exposure to decentralized finance, and they will buy, I think, 6 different coins, which they will allow those people to get exposure. All of those coins are available to anyone today. You or I can go with an internet,
$500 or $1,000
or $10. I mean, it's literally that easy. So you can get exposure ahead of these institutions, or at least on the same playing field as these institutional investors. So I'd say the big one, sort of taking a step back, is your ability to get exposure to participate in funding projects and protocols and ideas, which normally would have been only for venture capital, private equity stuff. So perhaps, thinking about crowdfunding, maybe someone has a great idea about a new product which you understand. It's I don't know, ethical soap or plastic-free product or cosmetic or something, and you think that's a really great idea. Someone can crowdfund that and get source funds from individuals through a blockchain and through a coin on a blockchain. This would have all been something that would have been very hard for any of us to do prior to this technology coming about. But so I think actually, far from making things worse, it will make things far more equitable and fairer. So taking a step back again, there are 5 sort of big areas where I think decentralized finance is going to be huge in the next few years, and we're already starting to see it. And these are themes that I'm sort of looking at and trying to invest in. One is borrowing and lending. So now it is very easy to use your crypto, whether it's Bitcoin, Ethereum or something else, as collateral to either lend out or use against to borrow a loan for various different financial activities. So if you literally wanted to get a loan out to invest in more another crypto or to leverage your crypto position, or you wanted to hedge your position, you can pledge. So BlockFi, a company, allows you to pledge your Bitcoin, and you receive, I think, about 6% interest a year, which doesn't, well, I think in this current environment, 6% is a pretty good return. And you're also getting that return in Bitcoin. So this, in terms of competing with the banks and your bank offering you next to nothing, you could easily see, and we're starting to see, people pulling out their money from the traditional finance system, and finally savers are being rewarded for their savings and earning a decent return. So this whole borrowing and lending... But
that does reflect the underlying volatility of the asset class.
It does. So, if you are a believer in the asset class, then, and you're happy to be a long-term holder, and then you pledge your collateral. And BlockFi not only offer you the interest payment in crypto, you can also take it out in any fiat currency you like. So if you don't want the interest, the volatility for the interest in the crypto, you can take it out in your own fiat currency of choice. So we're seeing explosion of companies and coins in that space who are now offering these services. So it's a very traditional borrowing and lending platform service which is being disrupted. So that's one thing. The other thing that I'm looking at is decentralized exchanges. What we have today is centralized exchanges, New York Stock Exchange, Coinbase itself. If I think many of our listeners would have heard of Coinbase. It is a crypto exchange. Decentralized exchanges are peer-to-peer exchanges which do not rely on a centralized body to transact. So it's essentially a digital marketplace for peer-to-peer transactions. So you could buy or sell different coins. I could sell Bitcoin, buy Ethereum, but it's all a decentralized marketplace, which means it's again, going back to what we were talking about earlier, far more inclusive. You don't have to go through all of the rigmarole of some of the KYC stuff to be able to participate in this new system. And we've seen explosion that in volumes that I think in June last year there was 2 billion transacted through these decentralized exchanges per month. In December of 2020 there was 25 billion, and in January, I don't have the February figures, but in January was $62 billion worth of transactions, trading volume through these decentralized exchanges. So I think that is huge. And why it's interesting is decentralized exchanges, they reward the people who provide liquidity to that exchange. So you actually get back some of the fees across the exchange if you provide liquidity to the exchange. How do you provide it liquidity? You pledge some of your tokens as collateral.
That I suppose is what has traditionally happened in, say, the New York Stock Exchange with market makers who get paid for providing liquidity when others don't need it. That's what you pay commissions for, often. Yes. Bid offer spreads. So it's the same. It's a replication of traditional finance, but in a more open way, and perhaps
open and inclusive way. Yeah, absolutely, open and transparent way. And so we've seen an explosion in volumes and interest in that space. A couple of other things that I'm looking at is, one is privacy. Privacy, I think, is going to be something that takes longer for people to wrap their head around. But privacy is so important because, as I've said many times on this show, it is the most open, transparent system we've ever seen. And open and transparent also means that, there is very little privacy. You can see transactions going across the network and stuff. Now, because someone wants something private does not mean it's a nefarious activity. There are an awful lot of transactions that we do that should be private, some financial transactions. when we think that we are going to disrupt not just finance but beyond. Health records, which will be sent across the blockchain, they need to be private. Land title deeds, when we start to tokenize things and put land on the blockchain, that needs to be private. So this whole thing around people who can build privacy solutions on a blockchain is also going to be huge in the whole area of decentralized finance and beyond. I'm going to skip one and just talk about the last thing, which is sort of ties all this in together as well, is Web3. This is the sort of 3.0 version of the web, which is a far more decentralized version than we currently have. So we're starting to see a build out of that. Why is a decentralized web so important? As we found out during the elections and beyond in the US, there's an awful lot of censorship of what people can and can't view. Global technology companies have for some time been able to feed us certain information based on our choices and stuff. So we no longer have, I think, a fair and unbiased use of the internet. So having some sort of decentralized internet, I think, is paramount going forward. And people are therefore building solutions on this decentralized internet, this Web3, around things like file sharing. So we're no longer reliant on Amazon Cloud for the cloud solutions for housing all of our stuff and what can and can't be shown on the internet. We had, and I don't want to get into the details, but we had Dr. Seuss books are banned. Whether you think that's right or wrong, like a decentralized web would allow those books to still exist.
But I guess the question that springs to my mind in the last couple of minutes that we have left is, when you talk about a decentralized web 3.0, that was in a sense 20 years ago what Web 1.0 was designed to be. It was designed to be something that couldn't be subject to censorship, couldn't be subject to government oversight. And inevitably, as technology evolves, so does the ability of governments to evolve to influence that which they fear. And one often fears things that you can't control, governments particularly, and therefore they exert influence over them. So what's to suggest that they won't simply be able to adopt a new set of protocols to control that which is currently perceived to be a free and newer and better opportunity?
And I'm not a technologist, and I don't fully understand the technology behind it, but my understanding is the way this is being built, this decentralized web, the people who secure it and the infrastructure that goes on to secure it is fully decentralized. Could it in time be co-opted by governments? Possibly. I am a big believer that governments ultimately, will need to step back and have probably too much power. And I think, what's going on in the world will only catalyze that. And we will, I'm an optimist that we will end up with something more decentralized and fairer. That's not to say there won't be a struggle, but there are early signs, particularly in the US, of senators who are far more open-minded around some of this technology. Now, of course, there needs to be regulation, but I think that regulation will not be as severe as some people suggest. I think that regulation will look to integrate these new technologies into the current system we have, and we'll ultimately end up with a far better system, with a far better and fairer system.
So your hope, belief, however, or theory about this is there is a better system there's a better system available, and it's coming to the mass market. It's going to become increasingly available. And while it's true to say, or should that be whilst it's true? I have to go and consult my grammar expert, my mother, at some point on that one. While it's true to say that governments will seek to regulate that and will seek to influence that, their ability to do so will be less influential than it has been in the past, thereby enabling more people to have access to something, and therefore having a better opportunity to make use of it without the overbearing influence that governments otherwise can sometimes influence.
Yeah, and that's partly because I think the technology, the value of these decentralized systems, open source, being able to put people to build on top of them is so much better and superior to a centralized system. So if you really want innovation to flourish, and we've never through human history quashed innovation, I think ultimately that people will understand and arrive at that fact, with some regulation alongside. So yes, that is my view, that we will end up in a far more decentralised and fairer environment, both the financial system and beyond.
And on that basis, a society that has more opportunity for everybody, because by definition there is decentralisation of it.
Absolutely.
Adam, fascinating. You have been writing a little bit about this, if I'm not mistaken, on And I think last time I rather butchered your Twitter handle, so rather than me try to pronounce it, let me ask you to tell the audience where they can read and learn more about these thoughts that are germinating from you.
Absolutely. So my Twitter is sort of where I spend most of my time sort of writing and putting this stuff down.
Right?
So from
yes.
and then underscore the number 10,000 and then FT. From underscore 10,000 feet.
10,000 feet.
FT.
Okay, got you. Well, there you go. Adam's ruminations and incredibly thought-provoking conceptions are spinning still in my mind, and I will no doubt have to digest those and then harass you at a suitable time to re-explain it all again to me. It takes me 14 or so times for you to explain something before it properly sinks in. But I do think you've given us a lot to think about and a lot to challenge our grey cells with, and a lot to just challenge our preconceptions as to where society is. So thank you very much for that. Adam, you've given us your Twitter handle, so thank you for that. Don't forget, the Cayman Islands Society has a Twitter handle for its radio show here, Money Sense, which is at Money Sense Radio. So if you have questions, tweet us on that. If you have comments, tweet us on that, or email us at moneysense@candw.ky. So with that, thank you very much for joining us. It's been a pleasure having you on the show, Adam. Thank you for joining us, and we'll hope all our listeners will tune in 2 weeks' time.
The Cayman Islands Chamber of Commerce Pension Plan. We're here for you. Are you aware of the performance of your pension plan? The Chamber of Commerce Pension Plan provides quarterly fund fact sheets for our members to stay informed with the plan's performance. For the year ended August 31st, various life cycle funds provided returns between 9.2% and 16.5%, and our all-in expense ratio is currently the lowest it's ever been, a record low at 0.72%. Visit chamberpension.ky to review our fund fact sheets. You can see the performance as far back as 10 years. Remember that pensions are a longer-term investment strategy. Focus on the long term rather than the short-term returns. The Cayman Islands Chamber of Commerce Pension Plan continues to perform for you.
Money Sense is brought to you by the Chamber Pension Plan. For further information, visit chamberpension.ky.
Studio time now.